If you've been following this series, you've probably got one lingering question. What happens when I pass away? What happens with my reverse mortgage? I'm Ken Pitts, mortgage advisor and author of kineticwealth.com, and I've written a book specifically designed to help answer questions about the reverse mortgage. And if you've been following this series, Reverse Mortgage Myths Busted, my attempt here is to give you as much information to make an intelligent decision about whether to take out a reverse mortgage. If you found this series helpful, be sure to like my page, subscribe, and get a copy of my book, Kinetic Wealth. So what happens when I pass away? If you have a reverse mortgage, that's when the loan becomes due. That's when your heirs will need to sell that property in order to pay off the existing balance of your reverse mortgage. It's a very simple process. It is no different than if you had a home equity loan or a purchase mortgage out on your property. Same thing applies. When you pass away, your property has to be sold to pay it off, but your heirs have options. If one of the heirs wants to pay it off out of insurance proceeds or other proceeds that maybe you've left as a legacy, they can do that as well if they want to keep the house. It doesn't mean that you have to get rid of the house. It just has to be paid off. So let's talk about some of the options that your heirs can do. They can simply put the property up for sale, take the proceeds, pay off the loan, and the estate will get the remaining equity. You may have heirs who would like to retain the property. They can utilize any of your other assets from your portfolio to pay off the existing mortgage. And then they can then take ownership of the property, and whichever heir wants to retain it, they can retain it. They do have this flexibility. And always remember that if you've taken out an FHA-backed reverse mortgage and the home happens to be worth less than the mortgage, a good example I can give you is I had clients who came to me, his in-laws had taken out a reverse mortgage when his dad turned 62, or his father-in-law turned 62, and they lived to the ripe old age of 93. That reverse mortgage accumulated a lot of interest over that time, but they were able to sustain their level of living. They had money coming out of the reverse mortgage to help them all the way through those 30 plus years. But at the end, we were looking at the house value and the mortgage being about equal. And his mother-in-law was still going. And I said, well, you're likely to go in a position where you're gonna owe more than the value of the house. That's okay, because your parents had a reverse mortgage and that mortgage insurance was gonna kick in to help pay down the loan so the heirs would not owe anything. So always an important point to remember, particularly if you're taking out a reverse mortgage at a younger age and you're going to retain and live in that property for a long period of time, it's good to have that insurance in place. An important thing is if you're going to take out a reverse mortgage, and this goes back to what we just talked about with the heirs, it's important to communicate with your heirs so that they know you've done this and they understand how to get out of that reverse mortgage at the end. I've had to counsel some of my clients who were in their 60s whose parents had taken out reverse mortgages. They didn't know it. They didn't know how the loan worked. They didn't understand what they needed to do. It's really good to communicate with your heirs so that they know exactly what the plan is, why you're taking the reverse out, and how it gets paid off at the end. And if you get a copy of my book, Kinetic Wealth, it's outlined in there what happens when you pass and how to pass that property on and get the mortgage paid off. And going back to some of our earlier videos, understand that you're still leaving a legacy. There is more than a high probability there's going to be equity left in that home at the end, and that equity is going to go to your heirs when you pass away. Or if you go into a long-term care facility, there's money left over in equity when that house sells. That's going to help pay for your health care costs. So remember, you're not giving away all of your equity to the bank. That equity is yours to keep and to pass on to your heirs. So what happens when you pass away and you have a reverse mortgage? The loan comes due, just like any other loan. You get to retain the equity, your heirs get to retain the equity. So that wraps up Series 1, Reverse Mortgage Myths Busted. And for more information or a deeper understanding of the reverse mortgage, be sure to get a copy of my book, Kinetic Wealth. And if you ever have any questions on reverse mortgages, just contact me directly. I'd be glad to help.